So when you start to recognize that that's the setup structure, that's the setup structure there for that spike to sweep the liquidity. This is the liquidity spike here. And obviously that sets up the geometry of trade. That sets up the geometry of that trade, doesn't it? And it doesn't matter how many times we see this, we can start to recognize that type of structure on the way that we view the marketplace. We start to recognize that when we see these structures forming, we can start to recognize what it means. We can start to recognize the symbolism. And the good thing about symbolism is people remember symbols. That's why pattern traders are so, I was going to say pattern traders are so successful, but they're not. They're actually pretty terrible traders. But they can demonstrate stuff beautifully well. All in hindsight, of course. But this wasn't in hindsight, was it? This was a classroom we did before this happened. So this was not in hindsight. This was before it happened. This is the advantage of secret geometry of the marketplace, isn't it? This is the advantage of knowing this stuff before it sets up these areas. So when we understand this, we can understand the concept of sweeps. That's what these shoulders are in here. That's the manipulation phase prior to the main kind of temple structure, if you like, coming out to visit the marketplace. And you see that all the time. It's called a spring trade, right? You see it all the time. So this is this green phase here, isn't it? This is the green phase. And then we get the temple developing into that. So you can see the temple really coming in there. And obviously it carried on with a spike here, but you get the basic idea that that's the temple. If that's the temple, this is the manipulation of the prices before the temple breaks north. And you can understand that that becomes what? You get that idea that already you're starting to see that temple structure, aren't you? You're starting to see that temple structure, yes? Now, I know it's a little bit, maybe a little bit not so sure about this kind of narrative, but it's just the basic idea, guys. You can start to recognize the structure of this geometry, can't you? You start recognizing the structure of this. The idea that the price goes from the high of the structure to the low of the structure, and then obviously it starts to develop into that target price, which is the measured move. It's just one of those elements that always appears in terms of understanding the concepts behind the sacred geometry of the marketplace. You know, it's just structure. The Masonic movement was based on the Master Mason concept. The Master Mason concept was built around the idea of stone masonry. Stone masonry was all about structures. It was all about foundations. It was all about the different angles that you would take to build an archway, for example. The pillars that were required, the size of the pillars that were required to hold up a certain amount of weight in terms of a ceiling, the pitch of the ceiling so that it didn't fall in. All of that is sacred geometry, isn't it? It's all the sacred geometry of a master mason in the marketplace. So we can understand this geometry when we see it here. We can understand the idea of this geometry here. It's just straightforward, guys. There's nothing unusual about it. It is just straightforward. So obviously in the top edge, you see that part of the structure here coming into play, and you can see how it starts to form. The spring trade to the top side, the manipulation, then the big pop to the downside, and the target price. And obviously that's exactly what you start to think about in terms of this geometry, in terms of that structure. You can see it already forming in that area there. And obviously from that, you'd start thinking to yourself, well, the structure should now go something like this. The structure should now go something like this, shouldn't it? That should now be the kind of structure that you'd expect to see forming in terms of a manipulation. And then obviously from that, you can start to understand where the manipulation probably develops into. You can already recognize how the manipulation could develop into another spring trade by understanding simply the geometry of what just happened. Now, this is just to give you an example. This isn't supposed to be, this isn't something that we're doing as an actual exercise. It's just to give you an example of what this looks like. And obviously in terms of that structure, you can obviously start to see how the structure forms from these ideas that if the price were to test back down into this area here, you can start to see if the price were to test back down into this area, they could build up some liquidity in here, run the spring, and then bring it back to fair value. Bring it back to fair value. Do you see that? Now, obviously, as I said, we're just doing this just to give you guys a little bit of a look at it, the concept of it, because when you look backwards, you can see that this structure is exactly how this market evolved from this area, didn't it? From this basic structure here. Do you see it? So from this basic structure here, you can see that that's where the market evolved from and to. It's just, as I said, it's a side element to this storyline, guys. It's a side element to the storyline. But it's just, as I said, a lot of people in the retail space, they love the visualization of the markets. They love seeing patterns. And obviously the patterns that they see are usually wrong because they're all based on things like, you know, these other elements that people simply don't quite understand. But if you think about things like head and shoulders, that is part and parcel of this type of pattern. And it just gives you a few clues about where we might start seeing some of this, eventually, some of this storyline developing from and to. It gives you a few of these ideas. And obviously, you can see that in this case here, it's obviously played out, you know, as a perfect example of what we've just been talking about. But it was something we covered in classroom this morning using the DVO1s. That's really what I wanted to get to in this point. The meal, well, the meal still be bidding off the halfback trade. The exciting thing we've seen this morning is that these structures, these geometric structures of halfbacks and measures have been simply quite incredible today. If you look at the oil and you look at the meal, you can simply start going, wait a second, there's something in this. Yeah, there is something in it because it's the structure, the geometry of the marketplace. The geometry of the marketplace is based upon the weight of money. It's based upon the weight of the ceiling, that you have to have certain angles to hold up ceilings so they don't fall in. There's certain angles to hold up bridges so that they don't fall in. Every engineer knows this. You can obviously give an engineer a project to build a bridge, and obviously the key concept is they can't just build a bridge and it just goes straight across a river unless it's floating. It's just going to give in. So all of a sudden you've got to build a roof to the bridge, you've got to build a pitch to the bridge, you've got to build an angle to the bridge, you've got to have structures that can hold the bridge in place without it falling in. It's called gravity. Well, in the market's case, it's not gravity, it's weight of money. It's weight of money. At some stage, the weight of money becomes too much and the market caves in, the market collapses behind the weight of money, just the same way as a ceiling collapses. So the geometry of the sacred geometry of the master masons, of course, is very, very true for the marketplace. So if you understand any of that process, you will obviously understand what I'm talking about. And of course, the home of the master masons, Scotland, of course. Sell side dollar. Sell side dollar. Looking to try and get down into this bottom structure here at 102.20s from a high price here of 102.60s. We've got a wee distance to go, but I think we'll get there today. I think we've got a good opportunity to make it through to 102.20s. Let's see what happens. 102.20s. Let's see what happens, guys. We've had a few good max trades today as well. We've had very, very good stories on max. Unfortunately, max did not. I repeat, max did not get the sell in because of the spike. That was a bit of a pity. We were one away, but we obviously got a lot of aggregation up there on a DEFCON 2. But yeah, I mean, it is what it is. Max did buy into the spike, by the way. Max bought 33.5. Max bought 33.5, and on the spike it traded 43.5. So Max made $500. The drawdown on that 33.5 was about 4 ticks. The drawdown was 4 ticks on the Max trade. You can see it just here. So Max came in, bought it here. We got a little bit of an add-in opportunity there. So you can see we went back up to 4 there at that stage. So there's another edge to buy back in at that stage. And we're obviously aware that Max is running this area. And obviously we've got this brilliant buy side pop. And obviously we went up to 5 there without Max. We went up to 5 there, so you're always going to book some monies at that stage. And obviously on the next pin here, you can see that all we got was aggregation. And obviously that's another pin, but that's obviously a $500 winner there for Max. And nout wrong with that. Nout wrong with that, guys. What happened since then? Nothing. I thought we might have got a Max back into the bottom edges here, but you can see that we didn't. Even on this massive spike here, we simply weren't getting any Max interest in this. And I'm a little bit disappointed, because you'd have thought that because it's the same Max level, Max would have had an interest, but you can see it didn't really develop into anything, which is quite interesting, and disappointingly so, because obviously what we got from that buy trade was a very, very big spike to the upside. But again, we've talked about this before, that when we get Max levels, we should always pay attention and possibly bid back into those levels. You can see that if you did bid back in, you can see you've got an aggregation trade just there. And obviously that's aggregation is when you see at the very bottom line, you see the big very, very dark shaded color, that's aggregation. So when you see a very dark shaded color like there, that's aggregation. It's usually going to be a reversal at that stage, but it might not be. And obviously you see the very dark color there, that's aggregation again there. So you know that that's possibly a sell. And you can see obviously that sell came in and really drove the price down. Max, I thought about starting to bid in here. We got up to a DEFCON 3. You can see when Max came in, we were very, very close to start getting involved in this. And obviously if Max is involved about 28, the low should be 26s. So if you like that type of trade, because it wasn't an actual Max trade, buying off the 26s made a fair case. We talked about that this morning. It's about 2 points away, sorry, from where the Max trade comes in, because it becomes what's called the market maker bracket lows. And obviously that market maker bracket low didn't stick around for too long, but it did stick around long enough for you to make some nice easy 4-point rotations, a couple $100 on that rotation. Coming back in again, we can see that we get a very, very close storyline again here on Max. Not quite the story I'm looking for. So we're waiting for another opportunity, and you can see it simply didn't show up. Simply didn't show up. No trades, and that was the end of this down move at the moment. Now, obviously, what's happened since then? Sorry, I've taken the chart away too soon there. What's happened since then is you can see what's happened. The price then dropped down to the RGL, and what happened? Does everybody see what happened? Max bought these 2 candles. Now, I'm not going to buy this one because remember, the black line at the very bottom edge has to be going down, not up, for it to be a full Max trade. There it is there. There's your buy trade on Max. Does anybody like that trade? Well, 15s. That's why Max has been waiting, of course, because obviously we talked about Max not wanting to buy through this phase, but then all of a sudden Max buys the 15s, and you go, okay, what are you interested in here at 15s? What are you looking at here? You can see that Max has taken 15s bid up to 19s, and a spectacular Max buy trade for another. You may say 4 points isn't spectacular. You're telling me $200 bottom tick with no drawdown isn't spectacular, guys. My God, you're in for a bit of a shock when you try and trade the markets real, guys. A $200 profit with no drawdown is damn good, I'm telling you. And that's in the world of institutional trading. It's damn good. Well, this is on TradingView on a retail platform, guys. Unbelievably good, right? So you can see that that was a great little trade. Beautiful little pop to the upside. On balance, it starts to get very heavy red here. We can see that it starts getting red in here. So if you wanted to take some monies, of course, it wouldn't be a problem, but not really any signal to reverse it into a sell or a buy at the moment. So nothing much to be doing at this point. Anyway. The big news today, of course, was the ECB. Who would have thunk it, guys? ECB came out at no change. Well, it was expected to be no change at this meeting. It's the next meeting that we're interested in, because the ECB have signalled the possibility, well, I say the ECB members have signalled the possibility of a 50 basis point. Now, that's why we got a spike down on the euro, because they basically said 25 basis points at the next meeting is pretty much penciled in already. It's not pretty much penciled in. It's probably in a big marker pen that they're doing 25. The challenge is whether they're going to do 50. So the market reacted to that on that basis, and they spiked the euro lower on that news. But they are going to do 20. They are going to do 50. They are going to do 50. Whether they do it in one meeting or two meetings, they're definitely going to go positive, right? So obviously with the dollar very, very strong through that period, the euro had an opportunity still to stay bid. And the euro has rolled back around off those lows. 107 is obviously a big key price. We talked about this earlier this morning as well. So we've got a storyline. It's making money. And long euros, short dollar for me has been the only storyline in town. There's no way we could have ever been selling euros, that's for sure, right? Right? Correct, guys? There's no way we could sell euros. Not when the carry's down here, not when the real yield's down here. There is no opportunity to ever sell euros. So the only trade we can really do is sell dollars. And obviously we've had this area. We tweeted it last night as well. We said to you guys, sell side top line dollars made a lot of sense to me. Yes? Did we tweet it? Yes, we did. We tweeted the Dixie last night, guys. So you would have seen that. You'd have been able to be involved in that. You'd have been able to read that storyline. And you'd have been able to act on it this morning. So sell side dollars seems to be the right trade. It seems to be the right one to be on. And that's what we've been doing this morning. Sell side dollars, guys. Sell side dollars, yeah? Pretty good? Pretty good.